All right.
Are we live?
We are live.
Okay, hi guys. Welcome to my favorite day of the week because I get to spend it with you, and that is, I love doing these things live. And of course, we know what's going on everywhere in the world. You know, even though it's not official, we are really kind of at war with Iran. And, you know, like a single precise cut that unthreads a seam. Well, this was a pretty targeted strike, and it looked really surgical and really contained, but you never know what's going to happen. You know, it reminded me a lot, and I thought about this, and I thought about it with my daughter too, like the recent Venezuela operation that removed a single regime leader. Well, it really begins with the targeted strike, but it is not quite like Venezuela. And I want you to understand, I am very glad that Ayatollah Khomeini, and maybe I should not, this is not my, okay. This was not a person that was good to the public, right? However, I'm seeing some things that have me concerned, and it's not even about this war. I'm going to come back to that. Just hold on to it. But quite honestly, one of the big differences between Iran and Venezuela is that Venezuela did not immediately threaten any global choke points. And I think that we can see with this huge spike that we've had today, well, in oil, that Iran is much different, particularly since they closed the Strait of Hormuz. So let's just begin with a very simple question, because the contrast between what's happened in Venezuela and what's happening in Iran is the spine of what I'm going to talk about. It's a tactical success that may carry strategic consequences far beyond its immediate aim. So I'm going to introduce what I'm concerned about today, but then I'm going to get into that in more detail next week because I really want to think about all of this. So let's just begin. Can we go to the slides, please? All right. So will the seeming success in Venezuela's model, now executed in Iran, swift, decisive, and executed without any prior congressional approval? That's the piece, that last piece. You know, it's emboldened even more brazen future moves. That's my concern. And so what I'm seeing is a pattern that is evolving. And, you know, why is it so different? Well, the Strait of Hormuz isn't just any waterway. It's a critical choke point for global trade. If it stays closed, it could lead to severe economic disruptions and lots of inflation, which is why you see the markets doing what they're doing. And I'm going to get to what's happening in the gold and the spot gold and the spot silver markets, as well as the physical markets in a second. But quite honestly, rising prices and potentially even more military conflicts between countries that rely on the Straits of Hormuz and many other areas that are being disrupted right now. Those conflicts between countries, well, they rely on this route. And Iran is not just going after Israel and the U.S., as you might know, it's going to their neighbors as well. And that sets up for a much larger fight, potentially pulling a lot of countries, maybe the whole world. Maybe this is the conflict that brings us into officially World War III, which I'm going to get back to that in a minute too. But just keep in mind that, please, removing an abusive dictator, I am all for, because I want the public to have their power back. And of course, it can be morally understandable. Yay, he's gone. It's a relief to the suppressed and the abused public, but the process matters for legitimacy and risk, of which, quite honestly, there are a lot of layers. And here's the potential lesson. Precedence shapes expectations, and expectations shape behavior. In this article and I haven't had a chance to read the whole article yet, but rising anxiety. Many in Cuba wonder if the United States will attack their country next. Just saying. So, frankly, Iran's public reaction is not a surprise because they have vowed that Jerusalem, Washington will suffer the consequences for the killing of their leader. This growing conflict is beginning to involve more and more countries, and it threatens U.S. military bases. We've seen U.S. troops die as blasts shake Mideast, fear of wider war after Iran's response. The public is divided there. You know, there are some that actually were enamored and supported the Ayatollah, and many that were oppressed by him. So you have sorrow and joy, fear and hope, and the rising threat of this broader war perhaps being the final trigger, making World War III fully visible. That makes for a future, quite honestly, for all of us that's cloudy to see, which is why it is so important to go back to basics. Gold and silver have been money for thousands of years, not through this conflict or that conflict, but through every single one of them, and they've made it through without the loss of purchasing power. So the retaliation, well, frankly, that's crystal clear, because war is one of the constants in currency regime shifts. And what you're looking at here, I just pulled this morning, so I have no annotations on it, but you're looking at where Iran has dropped bombs and where the U.S. and Israel have dropped bombs into Iran. Look, it justifies inflation. They can point a finger and go, well, it's not us doing this, even though that's what they are going to do, and that they do. It's the war and the absence of transparent collective decision-making that amplifies the perception that force, without going through required channels, it's viable. Do what you want and then ask for forgiveness later. It's a lower cost tool because it can happen just like that. And I mean, the question is, once things are done, can they be undone? Maybe, maybe not. It kind of depends. But what about that ongoing shift in global allegiances? Does this not solidify that? Because unlike the Venezuela case, the theater here touches critical global choke points and critical global leaders. Here is the UN saying, no, we don't go along with that. Now, this is one person in the UN, not the whole UN. But President Trump threatens Iran with a force never seen before. And while we were told that this is just going to be about a 4 or 5 week operation, President Trump foresees extended attack on Iran as U.S. adds troops and jets to the region. Is this going to be a constant war like we had in Afghanistan? I don't know. I just happen to have one of the Iranian rial currencies, that 10,000 rials that have absolutely zero value. I can't buy anything with this. And is that going to get worse for the people of Iran, whether they were abused or not abused? This is a huge deal and used to justify a lot of what's going on. Because Congress, well, what if they are actually forced to now grant this war, we just went through the strike down of the IEEPA, the EPA tariffs. Well, that kind of would give President Trump a much broader base for those tariffs. If Congress actually declares that we are in war, then a law that was put into place in 1917 that is still legal, that also can be put in place. And that gives the president much broader powers than he has right now and that he's even taken so far. So it's kind of critical that we understand what's going on. And again, I wanted to pull the data as close to when I was coming on air as I possibly could. So this is the spot silver contract. And you can see when I ran the numbers, so this is as of yesterday's close, right? But even as of yesterday's close, we've spoken so much about the 200-day moving average. Spot silver, even with the correction that the contract has had over the last couple of days, or Friday, Monday, and today, as of last night, it was still over 68% above the 200-day moving average. 10% is a lot. What's 68%? These corrections don't really mean anything. And I'm going to show you this a little bit more too. I wanted to remind you that with silver, there is a finite amount in the physical world. In the contract world, there is an infinite amount. It's just about buying and selling it as a trade. But silver is not a trade. It is a fuse. That's why you see it so volatile. It's an indication of what's going on, but there is a finite amount of it with 36 different or more global users. So the physical world is very different than the paper world, though still it guides it to a degree. But keep in mind, there is a finite amount of it as there is with gold. Now, I didn't even have a chance to draw the lines on it this time, but you can see that even with the spot gold contract, as of yesterday, it was still 35.21% above that 200-day moving average. And remember, 10% is a lot. So all of these normal corrections are just giving that 200-day moving average a chance to catch up. But you also have to understand that when stock markets and bond markets implode, when they go down, right, then these entities that bought these contracts on margin, right, in other words, bought these contracts with borrowed money, they have to come up with more money. And so they sell off the contracts that the market will bear. And so here, what you're looking at in this chart was this morning with spot gold down about $53 or $153, something like that. It still doesn't even take us near that 200-day moving average. And a lot of it, U.S. equity indexes fall sharply in early trading. They needed to come up with money. It's that simple. This is for a trade. What you and I are talking about is a strategy, not a trade. It's a long-term strategy, and it's based on many things. But you guys know, like silver, there is a finite amount of gold, and it's used in 33 different corners of the world, probably more. Those were just the ones that I could think of. And it is the anchor. So it's not nearly as volatile as silver, but you got to have both. And the Zang International sound money strategy is built in layers. That, yep, it does. It includes a level of cash, and I'm showing you the Iranian rial that I can't buy anything with. And I'm also showing you my Zimbabwean $10 trillion note that I can't buy anything with. And let's face it, even dollars, where when I go to look for them, I don't know why I can only just find the small ones. But there was a time when $100, that was a lot of money. You could buy all your groceries you needed for a week and then some. Today, the only reason why any of it has any level of purchasing power is because you're still willing to work for it and use it as your tool of barter. But that too is going away, because what all of this will do is create much more rapid inflation. And when they talk about inflation going down, I love how they use those terms, because in your mind, when you hear, oh, inflation is down, what you think is prices have cut back, but that's not really the case, and that's not what they mean. What they really mean is that the rate and speed of the increase has slowed a bit. Well, this will speed it up. It'll speed it up in droves. And keeping in mind that in any con game, you got to have that confidence, and you got to have that new money. And that's what war justifies, is printing all of this money, because all of these troops and all of the equipment, right? Here's a little lesson for you. There are two types of debt. Self-liquidating debt. So that would be if I borrowed money to expand my business and thus attracted more customers, and those customers ultimately, they're buying goods from me and I can pay that debt off. So that's self-liquidating debt. But all of this is all what's called non-self-liquidating debt. So they build a bomb that costs however much, millions, billions of dollars, and they blow it up. Well, they're never getting that money back. For on yours and my level, that would be basically like a credit card. I go shopping, I put a whole bunch of stuff on the credit card. That stuff isn't going to generate income to pay itself off. That money has to come from someplace else. And the industrial military complex gets a lot of taxpayer money. Now they're going to get more, but building all of these bombs and sending all of those troops, you will see more rapid inflation. And since the level of confidence is like razor thin, I mean, I am just waiting for one little bit to push it to the lowest level ever. That, my friends, to me, will be a major technical piece, a major technical systemic shift. And we'll be talking about it in the day that it happens. And this could make it even closer to that. So I had a couple more little, okay. So this is there have been a few things also that I wanted to talk about that have come back to me from my meeting yesterday at the Zang International headquarters. And one of the things is that people are concerned about the spot markets for both gold and silver being so high. It's all in relative terms, and it's all in dollar terms. So I got to tell you that it doesn't really matter if you understand how much something is really worth, because there are two guarantees that I can give you. I will show up and do the work. You see that every week. But here's the other guarantee. At some point, all assets move to their true fundamental value. What's the fundamental value of this stuff? Well, the Federal Reserve purchasing power of the consumer dollar tells you all the time. It's actually the same as this, which is zero. It's a big fat zero. But the fundamental value of gold and silver, well, let's do that exercise again, because this is sound money. This is fiat money. They're both money. They're just the flip side of the coin. Governments create this. Corporations, I should say, corporations create this, because that's what the Federal Reserve is. God created this. So gold and silver are the only true forms of money that were not created by man. And every other, no exceptions, every other money that was created by man has gone the way of the dodo bird. It simply loses all value when the confidence is lost. So how much is this really worth? Is $5,000 an ounce a lot? Is $10,000 an ounce a lot? Yeah, I know you wish you'd have bought it at 248 or, oh, I don't know, how about $20? Because that's what it was once. But based on the most current data that I was able to pull for the level of debt, which is what creates the fiat money. So you use that as a proxy for all the money that's out there. And as I showed you, with physical gold and physical silver, both of this is the same, there's a finite amount. That means that this one little ounce that I'm holding in my hand, it's not worth $5,000 or $10,000. It's worth $36,000. Well, when you go to the store and something is on sale that you know is typically worth a lot more than what they have it on sale for, what do? Do you go, oh no, I don't want to buy it yet because maybe the price will get a little cheaper? Or do you buy all you can fit in your cart? That's what I do. That's what most people do. Do not be fooled by the lies, because we will come to a point where we will not even be able to lay this in other words, buy it. So you do it when you can, as you can, and get that strategy in place and executed. And if spot gold, if gold, not spot, if the true value of an ounce of gold is $36,000, then that means that the true value of an ounce of silver is $1,800, not $100 or $90 or $80 or $70. It's a flipping bargain. And so what should you do? Continue to accumulate while you can execute the full strategy. Because frankly, there's gold and then there's gold. There's silver and then there's silver. What do you want for your protection? You need to have a lot of all of the above, right? Because it depends on what it is that you're trying to accomplish. And I have to remind you of this because it's critically clear, and I haven't shown you this for a while. But this is a paper from the Bank for International Settlements. Who are they? They're the central banker's central bank. So you could say that they are the biggest and most important bank in the world. And they did a study on what share for gold on the interaction of gold and foreign exchange reserves. Okay, and what do they say about gold? Well, first, they say that gold is an asset viewed by many as durable and largely imperishable. Yeah, it is, right? It's indestructible. It's one reason that it can be the primary currency metal. And it refers to it free of default risk. The BOPM, Precious Metals, clearly establishes that gold bullion is the only case of a financial asset with no counterparty risk. No counterparty risk. It's not entirely true on bullion because there is the confiscation risk. That's why personally, because I lived through that myself, I lived through it. This is not hearsay. This, in 1964, my uncle had at least 3,000 ounces of these because this was the only legal way to hold it. It's significant. So, gold, the only financial asset that runs no counterparty risk. Unlike currencies and debt, which are claims on foreign governments or institutions, gold kept at home is not subject to political manipulation. These are not my words, my friends. These are the Banks for International Settlements, and you could go read them yourselves in the conclusion. Third, gold has been empirically proven to serve as an inflation hedge, at least over longer periods of time. So yeah, anything can happen in this paper manipulation. That's easy peasy. But what we're seeing right now, you better have gold and silver in place. What if this is officially World War III? You could easily lose your ability to position into this. Don't let that happen. I'm telling you, you don't want that to happen. I would rather be 10 years too early than 1 second too late, because that's when I lose all of my choices. And fourth, Last, its most widely recognized feature is its potential value in highly adverse scenarios. I don't know, you guys. And this is just one, right? We've been watching what's happening in the stock markets, in the bond markets, in the currency markets, in the money markets, in the private equity market, where they're right now not putting up gates to stop you. I'm going to be recording a video on that. You need to pay attention to that one a lot too. You know, if all your wealth is held in the intangible markets and those markets say no, you have no other choice, period. And this is from last week, and I didn't do like a whole only thing on it, but PGZT7SM asks, what is the difference between glint and kinesis? And so if you go in or you give us a call, we can easily and happily send you this table so that you can see the difference. What the same is that they are both redeemable. So in other words, you can say, deliver out my gold. They have different rules around it, but there's that. And now I will take questions. So you can just take me to full screen, please. Okay, so Duggan MT25 asks, why did gold and silver drop with the geopolitical instability we are seeing? Okay, gold and silver did not drop. It is those spot gold and silver contracts that dropped. And the reason why they dropped, number one, I mean, and the most significant reason is because the stock markets and the bond markets dropped. And so much of that stuff is bought on debt. It's bought on debt. And when it's bought on debt and the markets drop, as long as they can keep going up, as markets keep going up, well, then what happens is they borrow more against that and they trade with it, right? But when the reverse happens, like we're seeing right now with the markets dropping because they're so severely overvalued, all of the paper markets are severely overvalued, then they need to come up with money and they have to sell whatever the markets will bear. And that typically is your spot gold and silver contract. And you might notice that whenever I show you those spot contracts, I put spot, then whatever it is, in the contract, because you really do need to understand, and it's a paradigm shift. It's hard. I know that it's hard because we've been trained to look at whatever Wall Street tells us and say, oh, okay, that's good price discovery. Oh, okay, that must be how much it's worth. No, it's not, because every single asset in the world, food, water, energy, all of it has been turned into a trading product. So what you're seeing is the trade. You're not seeing the true underlying valuations. And I will shout this from the rooftops till my dying breath, because you cannot believe Wall Street. I worked inside the belly of the beast. I know what the truth is. And this is truth. This is truth, because it is truly full supply and demand. This is physical. Those spot market contracts, and I don't care whether you're talking about gold or silver or energy or food or anything else, those are just about trading. A little bit here and there, making a little bit of money. That is not a good thing for you to judge everything on. That's why I go over the fundamental values so much, so that you know the truth. Because after all, how many times can you be lied to when you do not know the truth? Every single time. Fundamental value. Anything that is created from, what does this cost the government to print? No. Back up, I misspoke. What does this cost for this private corporate central bank to print? 9.7 cents. Not even, well, certainly not that. Do I even have a new dime? No, but I'll tell you. You hear this? Wait a minute. Let me move the sound money. I'm going to show you what this is because I brought it in here to kind of think about it. You know, I just kind of throw the change in a bag and don't really think about it. Okay. This is a new dime. It doesn't even cost them one of these to print a $100 bill. But you have to work 100 times harder for it, don't you? And they've removed its purchasing power value at will while they made all the money because they got the use of these when they had the most value. And you're sitting with this and this ultimately when it has no value at all. And the reason why I brought this up and said, oh, well, maybe I should bring it in, is because I'm like, what do I even want to do with this change? I mean, there was a day where if I found a penny, remember that saying, find a penny, pick it up, and all the day you'll have good luck as long as it is heads up. Well, I mean, do you stoop to pick up a penny anymore? Because I used to. I used to do it all the time. It was like a regular thing. If I found a penny or a dime or what have you, I would pick it up because I perceived it as having some level of value. Well, that was lots of years ago. These years, I really do understand its value, and it's just about keeping you suckered in the system. So what I'm trying to tell you is, get out of the system. It keeps abusing you. Why would you agree to that? I do not want to work for corporate debt. It doesn't serve me well. So when I get that corporate debt, I convert it into this, as well as food, water, energy, security, barterability, but so is this, wealth preservation, but so is having ample of everything that I need that preserves my wealth. That's essential. Shelter. And what's the most important these days? Quite honestly, community. That is the single most important thing to me these days because I can't make a difference. You alone, we can't make a difference. But together, if we come together in community on a local basis, well, that can guarantee you surety in all of those things that are essential to your life, food, water, etc. Globally, 3% of the global population owns gold and owns silver, but 3%, that's all that it took for the Revolutionary War here in the U.S. And I'm thinking that's all that it would take to demand sound money back in the system instead of this garbage that is so irrelevant anymore and will become even more irrelevant. I'm telling you, this whole thing has me going. I'm seeing so many patterns and so many underlying things aside from just what's happening on the surface. I'm going to be talking more about that in the days and the weeks to come. Let's make our money matter again. How do we do that? Getting gold, redeemable gold back in the system, because then they can't inflate it away. Don't believe the lies of the spot market. Why are we seeing gold and silver drop? You're not. You're seeing the spot contracts drop. And Deja Vu 0101. Hi, everybody. Nice to see you all here. I agree with you 100 bazillion %. Hello, Miss Lynette, and isn't it something? These people have to disrupt the gold and silver markets. I don't like that very much. Have a great day, everyone. Yeah, they have to disrupt them, but you know what? You don't have to be disrupted. You know, I mean, do I really seem like, I know I talk about ugly, nasty stuff, and it's where most of my life is lived and buried in this, but do I really seem much like a doom and gloomer to you? Because I have a lot of hope. The difference is that I worked in that arena and I needed to so that I'd understand it, so I can help you understand it. Don't let it fool you. Don't believe the lie. Don't believe it. It's a lie. You want the truth? This is the truth. Thank you for that, Deja Vu. And Taryn Seattle asks, can you please explain the exit strategy as a gold and silver collector? Oh, 100% I can. Because there will come a point. Right now, as I've been talking, gold and silver are severely undervalued. Governments don't want you to understand this, by the way, because a rise in gold price is an indication of a failing currency and a looming crisis. And once you have that paradigm shift and you fully understand what true garbage this stuff is, you make different choices. Absolutely. So, right now, you have gold and silver that are severely undervalued, and because of the debt-based system, you have real estate and stocks and bonds and anything that's denominated in dollars severely overvalued. What we're seeing in the markets, I mean, this could be the beginning of the huge correction. I don't know. We'll find out. But all of the markets, even talking heads say how overvalued these markets are. Right? That's going to flip-flop. When that flip-flops, there are a few different points of exit. It's not just one big one. It would be multiple layers. So that's why it's important to call us and get your strategy in play so that we know where you fall with everything. But one of the layers that the exit strategy, well, you could actually consider the first part, the barterable part of your portfolio, because the intention is actually to use that up. And that consists of a certain level of cash, maybe a certain level of gold backs, and maybe even a certain level of digital gold like glint or kinesis, gold backs, okay. Then you're going into your barterable gold and your barterable silver. And the plan is for you to utilize that to sustain your standard of living. There are different pieces. So part of the exit strategy, if you got to pay your annual property taxes, this is what you do it with, a piece of gold. Now you may, and you probably will, and maybe not, we'll find out, but you might have to convert this into whatever the current tool of barter is. We're there to help you do that because that's part of your exit strategy. Another part relating to real estate would be if you have any kind of fixed rate debt. And, if I'll get more specific to real estate, a mortgage, right? When we go in, so this is the first layer, is the barterable part before and as we're going through the hyperinflation. But then we're going to come to a point where they revalue overnight, right? And they take gold that has 33 different users or more, and they revalue this fiat money that has no intrinsic value. One place, 33 places, right? And they do an overnight revaluation, this garbage, to gold, the primary currency metal. And that's when we will get a first big overnight revaluation like I've shown you a bunch of times. And when we have that overnight revaluation, that is when we will liquidate a small portion of your holdings to, bam, pay off that mortgage. And yep, for that, we convert it into this stuff so that you pay off that any fixed rate debt that you have, but that would include a mortgage. So that's part of the exit strategy. Now, I want you to understand in those cases, both those cases, and actually in all cases, the way the strategy is designed, and this is part of the exit as well, is that you are made completely whole. So if you used every bit of your barterable portfolio and you used the gold to repay that mortgage, well, over here we have accounted for that so that you've got more gold over here to offset spending that. Okay. Then the next part of the exit, so you can see it's the whole strategy is built in layers, and so is the exit of it. So then the next part of the exit, unless you have emergency money, because that's part of the barterable portfolio, the next part of it would be to take the gold and convert it into income producing assets. And what we're going to be looking for with that is who's going to survive, right? Because there are so many zombie corporations and zombie governments out there that frankly We don't know what the impact of that off-balance sheet debt is going to be on these companies, but there will be many, 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 and I'm certain some that will shock you like crazy, that will no longer exist as we go through that part of the revaluation. So what we're going to be looking for are those that do survive and those income-producing opportunities. But like right now, they're overvalued, they will become undervalued. And the smart money will recognize that undervalued circumstance and quietly accumulate. So what I'm looking for in that regard is that cup formation that I talk to you about all the time, that cup formation, because that's going to tell us when we have to do a little more due diligence than just that. But that's going to tell us when the garbage has been burned off and when it's time to begin to accumulate. And I'm going to tell you right now, if you happen to get out at the tippy top or you happen to get in at the very bottom, that's luck. I'm not even making that attempt. I'm not going to lie. I'm just looking for those patterns because my goal is to get you out somewhere near the top, get you in somewhere near the bottom. And, you know, obviously I need your cooperation to do that because I can show you what I know, but you have to do whatever it is that you're comfortable with, regardless of what anybody, including me, says. But in terms of the exit strategy, that would be another part of the strategy, is to take the gold that's up here, and that is going to be more likely in the slabbed form for this. And you're going to take what you need from this and convert it into those income-producing assets when they're somewhere near a bottom. And then, let's see, so that will be doing kind of right along the way till we get into the new system. And once we have a component of redeemable gold in that system, then we're going to know that they're done burning off all of this, okay? So then the next part of that exit strategy, where I used to think that I would convert a chunk of my holdings into that, not anymore, unless there's redeemable gold in the system. Then I'll change my mind again because I don't like the fact that they can devalue the currency as they want to, at will, whenever they want to do it. And I just don't like them having that much control. So I probably at that point would take whatever I didn't spend in the barter bowl and convert it into the new system. And then from thereafter, there will be some kind of schedule that's created that would enable you to just continue on unless there is redeemable gold in the system. Then I reserve the right to talk about that and change that. But essentially, there are different points, and I guess what I want you to understand, Tar in Seattle, and anybody else that's listening with regard to the strategy, is it's strategic what you're placed into, and that's got to be based on your goals. But it isn't just about, while every portfolio should have a foundation of sound money, it's going to vary based on where we are in the trend cycle. And that'll tell us how much we need and what kind of gold and silver that we need. So we will evolve as this trend evolves, but there's a few of the exit strategies. And if you're working with us, you will know them in much greater detail. If not, I'll still let you know what I'm doing. So, because I think everybody needs to execute this strategy. And if you're working with Zang International, you're executing the same strategy that I am, but it's tweaked because we will have different goals in different circumstances, et cetera. You know, a great example of that is how important leaving a legacy is for me, for my children. And so, you know, I know people that either they don't have children or leaving a legacy isn't important to them. So that wouldn't be part of your strategy if it's not important to you. Whereas it is a very big part of mine because it's that important to me. And it's okay. However you feel about it, this is not a judgment call. It is, you've got to do what supports your effort because, again, there's gold and then there's gold. There's silver And then there's silver. What are you trying to accomplish? Let's get you the right tool for the job. And Midi Kakak says, when purchasing gold, every shop asks me for ID, so it means government can control or ban any purchases when they want. Is there really any way for real privacy? Well, you're right. And I mean, and even when you're working with us, and I'm going to come back to another issue that people are having with shops lately. So if I forget, would you remind me, Tom? Yeah. But the point is, at this juncture, we are not legally required to report any part of the transaction to any government agency. We will always stick to the legal letter of the law. We're always going to have to comply with the law because you need us to stay in business so we can give you that guidance. And I'd rather work inside the system to change it. And that's the whole point of coming together, Citizens for Sound Money, and changing those laws, which are changing in a lot of places at the state level, right? And also at the federal level. But the state level is something that you and I can have some input on. There are some gold and silver pieces that at certain levels require reporting on it, but not these, not on the way in, not on the way out. Although all good citizens always pay all taxes that are due, I'm just kind of letting you know. So this to me is real privacy because there's really, even though there's a record of when I first purchased it, this is the kind of thing I like to give for wedding presents. I like to give silver for births, things like that. So if you hold it, it becomes invisible. And because it's physical, this is one of the reasons why they want to get it all tokenized. Nope. That's just one of the reasons. I don't even know that that's necessarily the main reason. I think the main reason is to give the banks more collateral for their leverage and their debt. But it's also about control. So quite honestly, the physical is the most private. Yeah, you're giving them that information, but truthfully, I can't account for all the gold and silver that I've bought over the years because I give it away as gifts. Just saying. And Cheryl AZ, where did the Ukraine war go? Honestly, all of these different conflicts are popping up all around the world, right? World War III, and there are many that are much smarter than I am in cyberspace, and they've been telling me for years that World War III has already begun. So yeah, the next new shiny object, because we've been taught to think short-term. Oh, well, that's old news. In the meantime, there's still people that are dying, and there's still people that are suffering from it. So yeah, good question, Cheryl. An optimistic beekeeper asks, hi, Lynette and team. Great interview with Rick Rule. Thank you so much. Yeah, I enjoyed that thoroughly. And how many times did you have to watch it? That would be one to watch over and over again because understanding derivatives is that important. A must watch. Do you plan to do more interviews? I have a list of people. Oh, okay. I have a list of people I would like to hear you interview. Yeah, absolutely. I just recorded one this morning with Dr. Ott. He, in his youth, had some exposure to Paul Volcker and certainly in the markets and what have you. And yes, more interviews. And if you have a list of people that you'd like to see, just send them into I think hello at Zang International, INTL. Let's see, what is you know what I don't have on here? I do not have any of the emails, Tom. So make sure that those emails get on there. And Jacqueline, if you're listening, because I think you probably are, could you please type in where you would want optimistic beekeeper to send in that list of interviews that you'd like to hear. I don't know. I think it's hello@Zang International, but I'm going to pull that. So we'll be getting back to you if this would probably be the first time that Jacqueline's not been listening to the live, but I know she's super busy, so that's okay. We'll get to that. And Truth's Finest asks, seems like they are keeping silver low as they need more of it for war. Well, again, silver is the secondary monetary metal, gold is the primary monetary metal, and rising monetary metals make people question, especially with rising inflation at the same time. I mean, there are so many contracts that create 2019, I was in the Bank for International Settlements spreadsheet on derivatives in the system, and this was when central banks were not super heavily involved in derivatives, just foreign exchange. They are now, but back in that day, they weren't super involved in them. And I counted and I saw, as before I knew print screen, unfortunately, with my own eyes, according to the Bank for International Settlements, for every 1 physical ounce of gold, there were 62,000 derivative ounces of gold. The markets don't read it like, oh, that's gold that never will exist. They just read it as ounces of gold. And the COMEX exchange, well, they've got contracts 500 ounces, 10 ounces. They've gone down to 1 ounce because they need every Ponzi scheme needs participation, and they need the public to participate to help suppress the price. Yeah, they're keeping silver low, but it's not because they need more of it for war. What do? They just issue debt and create more money. Big flipping deal. What difference does it make how much it costs? It has nothing to do with that. It has everything to do with perception management, which is a formal program, and I am doing a piece on it. I have that up, and with AI and some other things that are happening. If you don't have your strategy in place and execute it, get it done. The forces are not with you. Don't lollygag. Don't procrastinate. Don't wonder, oh, this or that. What is the value in your freedom and your choices? Because they're huge values for me. So yeah, they're keeping gold and silver low so that you don't want it, but they want it high enough that, all right, well, maybe that'll keep you away from it now. They don't care why you don't buy it. They just don't want you to buy it. Or get SLV or GLD. Don't you dare take that snippet, because you know very well I hate those ridiculous Wall Street products that give you the illusion that you own gold and silver, but not the reality. You need the reality. You need the reality. And Connor McCarthy, 5960, asks, Lynette, can you share more about chips being in cash? It sounds conspiratorial, but if you're talking about it, I feel like it's probably not. Are these public plans already been done? What's the goal? And actually, where I started talking about the chips and the cash, and anybody can read this and we can pull the link and put it in there, but one of my all-time favorite pieces from the International Monetary Fund, the IMF, is, this is the title of it, Breaking Below the Lower Zero Bound. You've heard me talk about it a lot. In that piece, they actually give you this 18-piece step or procedure for how they can change from one fiat money system into the next fiat money system. But one of the pieces that they're talking about is getting rid of cash. Why? Why does the cash matter? Well, cash is actually a debt instrument that does not pay or charge interest, right? So, like gold, that created restrictions in the monetary system for how much debt they could grow and what they could do with their interest rates. They had to get rid of the gold to give them more control, and they have to get rid of the cash excuse me, to give them more control so that they can break below zero. Because somehow, magically, negative interest rates are a choice. Because it makes a whole lot of sense that I'm going to bust my butt, save money, so not go out and spend on anything else, save up this money and give it to a perfect stranger or a government with the agreement that you're going to give me back less than I gave you to begin with. Why would you do that? There would be no good reason for you to do it unless maybe that was your child, in which case you don't expect the money back anyway. So, that's where they talked. The IMF discussed putting a chip in the system because they felt that if they just pulled the cash, much better to get you to volunteer to not use cash. But if you still held on to cash and using cash, well, then that would thwart them. So what you want is what they call cash in the wild before they have the chips in them. I have not seen, to answer the other part of that question, I do not know, but let me see if I can find something out. I don't think that they've put the chips in the cash yet, which is why I encourage you to get your cash position pulled before they do. They don't, I believe, have them in the $20 bill. They could, I think I've got a $100 bill in here somewhere with that bar that they put in there. Chips in, okay. So I'll look and see, but once they put the chip in there and they go to negative rates, so they're not really ready for that yet because we haven't made the full transition. But that means that if you pulled the cash out with that chip in it, it would go to whatever the interest rates were at the bank. So if you went to use the bill, this is according to the IMF, if you went to use the bill or redeposit that bill, it would reflect the negative interest rates in the account. So maybe it's a $20 bill, but by the time you use it or deposit it, it only gives you a face of 10, right? And think about this, because this is something that I ask pretty much, all brilliant people that I come across, because you're looking at the purchasing power of the consumer dollar on the Federal Reserve website. And officially there's 3 cents left. What happens when you get to zero? Any thoughts on that? Because that's inflating away the purchasing power value. So once you get all of the purchasing power value and you keep the nominal amount on there the same so people don't realize it, hey, this is a $20 bill that was minted in 1969 when we were still on at least a quasi-gold standard, and this is a more current $20 bill. Which one bought you more? Obviously, the one that we still had some semblance of monetary responsibility in it with gold, because that's what gold does. It forces fiscal responsibility. But once it gets the chip in it, then when you go to use it or deposit it, it's going to reflect a cumulative loss of principal value. You just won't see it because you'll still have that $20 bill or whatever it happens to be until you use it or you deposit it. That's when you will see the change. So the goal is to get all of your wealth so that, like the WEF says, by 2030, you own nothing. We need to take our power back. That's the goal. The goal is to control the population completely and have all the wealth transferred to the few. I say, let's get redeemable gold back in the system and give the power back to the many. What a concept. We had it before. Let's have it again. And ML Baker 40 asks, the metal is running out. Cannot chart that. Yeah, exactly. Exactly. That's why you don't want to wait. This is something we're not talking about the future. We're talking about what is happening right now. Thank you for that comment because you are absolutely right. And Truth's Finest asks, Lynette, when do you see silver and gold reaching new highs, and when will the manipulation no longer be effective? Those are absolutely two different questions. So, first of all, we're going to have to see what happens with this Iranian war and how quickly or prolonged it's going to be, because that is going to be very telling. And then, so I do think that we could see on the spot market making new highs anytime now, anytime at all, because of all of the geopolitical uncertainty. Having said that, when will the manipulation no longer be effective? Well, look, they're going to keep it manipulated because this is how they make money and how they control what you think and how you move forward. So when they need to regain public confidence, that's when they pull gold back into the mix. So it won't, even with that first overnight revaluation, maybe there'll be a one and done. I don't know. Globally, on average, it happens 3 times, but it could happen less than that, and it could happen a lot more than that, like we're seeing in Venezuela and Zimbabwe that are on their sixth iteration. So I don't know how many times they're going to do that overnight revaluation, but that will begin to move it toward its fundamental value because they need it to regain your confidence. But once they get that confidence back, will they abuse it? That's the importance of coming together and saying, no, we want redeemable gold back in the system. That's why this is our opportunity. I've never seen an opportunity for this like I have now. So that's our opportunity to get it back in the system. And then the manipulation won't be effective anymore because they won't be able to do it. Yeah. And Theodora, can you raise the questions, please? What does at some point mean when you say all assets go to their fundamental value? Some point could mean 100 years from now. And you're right, Theodora, because here we are more than 100 years later, and the value that they're showing officially for the dollar is 3 cents out of that original. And so as a technician, I can see what's happening technically, and I can talk to you about those. That's pretty simple. But what is way beyond my ability to control, and honestly, if you think back to 2008, that's when the system died. What I missed was the quantitative easing. So 100 years from now, no, it's already been in the works for more than 100 years, and officially we basically are there. And the only thing, Theodore, that's holding any of this together is confidence. And that's why the inflation that will become quite evident to the public, and they'll point the finger because it's all about the Iranian war, right? That's what's creating the inflation. Certainly not us. We're good. Yeah, that's not really true either. But if I had to guess, and so that's what I'm talking about. As a technician, I can tell you what the next most likely outcome is because I have lots and lots of history and data to back that up. But what is very hard to tell you is exactly that on Tuesday morning at 8:35, you will lose all choices. And that really is the point of being prepared. And I want you really to think about this because I've certainly had enough people that, even people that should know better, joking because at the moment I'm having to put quite a bit of fiat, this garbage, into my bug out house, right? You got to maintain, when you have property, you have to maintain it. And so somebody, foolish as they were, thinking that it was a joke, but I don't take this as a joke, said, well, I guess it's time to sell the bug out property. No, I personally don't ever anticipate on selling that bug out property. But what if I never need to use it for a crisis? I'm preparing for 40 people up there. Food, water, energy, security, barterability, wealth preservation, community, and shelter. 40 people. And I put a lot into it so far, and I'm putting more into it. I will continue to maintain it. In fact, I've even stepped up those efforts quite a bit because of where we are in this trend cycle. So if I never have to use it for that, that's okay with me. Why is that okay with me? Because it is my happy place. Because I do get to go up there, and down here I'm constantly surrounded by people and all of that. I'm still working when I'm up there, but it has a different energy and a different feel, so it doesn't matter. And why would it be so awful to make sure that you have surety that you can always feed yourself and those that you care about, that you have enough water for your sanitation and for growing food and becoming your own sovereign self, or the energy. I mean, do you not see the power, the grids that go down? We already know how weak the infrastructure is, and how easy would it be to blow that out? Pretty darn easy and above your control. Food, water, energy, security. I mean, what is the value of making sure that you can keep what you've accumulated and protect you and those that you love? And there is power in numbers. Why is it so horrible to be surrounded by people that love and care about you and create that surety and that security? Because I personally believe that you can never have too many people that love and care about you. So I can do that for every single piece of the mantra. And so does it really matter when exactly it happens? No. Just get into position. And then you have the luxury of time. And when these kinds of things happen, you're not impacted by them. So that's what I'm really encouraging you to get into a position to be as self-sufficient and independent as you possibly can. And since the 60s, we've lost an awful lot of empathy. We are not talking to each other. And think about the division that you see. If you don't agree with me, I hate your guts. How about we turn that around and have some level of respect, even if you disagree? How about having a level of respect for the person that's speaking? Because I got news for you. If we take away their right to free speech, we will lose our right to free speech. And we can't afford to do that. So some point could mean 100 years, and that's where we are right now, because it doesn't mean forever. And I say at some point because I can't guarantee you a time. And if you ever hear somebody that has taken my work and put a date on it, the only dates that I will ever put on something is if some official puts a date on something. I'm not going to put a date on it because that's way above my pay grade. And it doesn't really matter because it doesn't happen all at once. Look at that purchasing power chart. It started out at 100. Now it's at 3. Why is that okay with you? Because if you had that $20 gold coin, it's still where it was and then some from when the dollar had a dollar's worth of purchasing power. And I can say the same thing about silver. And from Facebook, Deja asks, when you say bullion is in danger of confiscation, what is not in danger of confiscation? That's a great question, Jade. I'm so glad you asked that. What they own. Okay, with the guys that write the laws and the rules, I can't guarantee anything because governments, to your point, they could do anything they want. They can confiscate anything they want. They can come into my home right now and they can confiscate all of the food and the water and everything. So you're 100% right about that. And that goes back to the Trading with the Enemy Act and other laws that Obama put in place when he was president and other presidents have put in place right along. That's why I don't get political, because it didn't matter whether it's a government a Democrat or a Republican government, every single one of them has done their part in moving the agenda along. I don't care who's in office. I don't care. But you ask what is not in danger of confiscation? Well, I don't think these are. These historically have been exempt from confiscation. And why? Why would they be exempt from confiscation? Aside from the fact that Treasury Secretary Wooden, knowing what they were going to be doing by revaluing the dollar against gold, well, he didn't want to give up his gold, and neither did his friends. So he created this special category. And in this special category, there are 1 ounce gold coins, or even $1, 20th of an ounce gold coin. Here, there's your 1 ounce. There's a 20th of an ounce gold coin that could sell for many, 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 many millions of dollars. Remember, I was talking earlier about my legacy gold. Well, this is how I think a confiscation would look. I could be wrong, but this is what I think it's going to do. And by the way, I do think that when they do it, more than likely this reset, and I don't know about probably the confiscation piece too, but it's going to be done on a globally coordinated basis like we saw after 2008. But anyway, this is what I think it's going to look like. They can control the spot market. That's easy peasy and cheap and no big deal. So let's say that spot happens to be at $10,000 an ounce when they decide to do an overt confiscation. Because to your point, all of this price manipulation, as well as the inflation and taxation and everything else, is a form of confiscation. So that's covert. This is overt. So spots at 10,000, most people in the U.S. anyway that own gold do it inside of retirement plans. And so you're not really holding it. You can't really protect it. It's not very private. And the government and the central banks might say something like, okay, well, it's your patriotic duty. We need the gold for this and that and the other thing. And because we're so magnanimous and so fabulous, I know spots at 10,000, we'll pay you $12,000 for it. And most people, like we talked about earlier today, believe Wall Street's lies. Oh, gold, it's a spot gold contract, mind you, that they're referring to, but gold is only worth $10,000 and they're willing to pay me $12,000. Okay, you can have my gold. But the person that paid $18 million for this 1 ounce of gold, is that person turning it in for $12,000? It's in a different category. That's the category that I want to be in. I guarantee you, I didn't even marginally come close to that. And there are many coins that are way closer to the manipulated spot market. It's kind of like a sweet spot that we work in at Zang International. But that, my friend, would be less likely to be confiscated. Why? Because anybody that can afford $18 million for an ounce of gold is likely to either be the person that writes the laws or certainly have the ability to influence the person that writes the laws. That's the category I want to be in. And that would be the category that would be less likely to be confiscated. And jewelry could be some good vintage jewelry, or some jewelry could be in that category as well. Though historically we have seen gold jewelry confiscated. And Colleen Allen, 3382, asks, I watched your short video on what you purchased with your copper wire as a child. Did you ever buy coins with your copper wire? You know what? Silly me. No, I did not. I bought glass pieces like I showed you, that piece of Venetian glass. I actually bought that for my parents for an anniversary present, and at the time, I remember it cost me $10. So also, what is the first gold silver coin you ever purchased? Well, that I did purchase some silver from my uncle. That would have been in That would have been, yeah, in like the 1960s, because silver was still in it was still in circulation, even though they stopped minting silver coins in 1965. Those coins were still in circulation. So I did get some of that from my uncle, who would have been silver. That was the first coin that I purchased. And I need you to scroll up, please. Thank you. And Axel John, is they another they? Okay, so when you hear me refer to they, I am typically referring either to the central banks or the governments. That's who they are. And thank you for reminding me, because I need to be more clear. So thank you, Axel John. And Nappy Noel 004 asks, Lynette, is this true? All those missiles have some form of silver in them. I am not a missile technologist, but it is my understanding that yes, because silver is the most conducive metal on the planet, and even comes a little bit ahead of gold in that. So the answer is yes. If so, that is true. When all the missiles explode, all that silver is gone forever. Yup, exactly, my friend. Silver gets used up in industry. And all of the debt that went into creating all those missiles, that's left behind. The silver's gone, the sound money's gone, but the debt remains. And isn't that true with everything? So, and that's the point. And that's also why I don't care in terms of fiat what they're going to charge for this, for real silver and real gold, because this is real money. This is not. This is a form of counterfeit that somehow we've allowed corporations to get away with. Why? That was one of the questions that Dr. Hatt and I talked about this morning. It's like, why did we allow that? Another conversation for another day. But RD 1414, what is the chairman of CFTC, Michael Sillig, doing about the blatant market manipulations besides nothing? That's because it is legal. You didn't write the contracts. Wall Street wrote the contracts. Wall Street gets to dictate what is that default and not. Yeah, what are they doing? Nothing. It's not their job to do anything. This didn't just happen. This has been going on since we, the public, allowed the government to take our power away. Can you see why it's that important to take it back now while we can? Because everything is in influx and we're going into a new system. That's why I keep saying this is the best time that I've ever seen, the best opportunity to make it happen. So yeah, you can't sit there and expect somebody else to take on this responsibility for you. If not me, who? If not now, when? Well, it's got to be us. And it's got to be now. Citizens for Sound Money. Yeah, let's get it done. Together we can do it. 3%, that's all we need. 3% of the global population. We can do this. And Alien Rex's crypto getting out of system? I guess the question is crypto getting out of the system? And I would say no. And I would say that I find it quite interesting that the cryptocurrencies are and have been, and really since October, really not doing very well. The AI, the overspend, I don't know, shades of 99 with the dot-com boom and bust and all of that. But are they getting out of the system? Heck no, darling, they are the system. They are the system. You want to get out of the system? Hold it, own it. Get out of the system. Let this abuse work itself through. Let these markets implode. there'll be a time when we'll be able to see who survives, when it'll make sense to go in and then buy it at a bargain. It's not rocket science, it's just logic. And we can do this. We can do this. And if that's not what you meant, would you please type it in again, and Tom will put it up there for me. And Naz NNNX asks, what do you want to say to $120 stackers? Keep stacking. Keep stacking. I'm stacking. But make sure that you have that community piece in place. Because while you can use gold and silver as a tool of barter, so therefore you can eat, how about taking on a bit more control? And maybe you don't know how to plant, but that's the point of going to a farmer's market or a community garden or your own neighborhood and see who has those skill sets. And maybe, I don't know, learning how to do some of that yourself. I think it's time for us to take our responsibility back, and one person cannot do it all on their own, even me. I always find it really kind of entertaining when people come onto the farm here and they'll say something like this to me. It's like, when do you have time to do all of this? I don't. But I am surrounded by a phenomenal community, and they're the ones that are really managing and evolving all of my food gardens that I have on this urban farm. And I'm totally an urban farm. And it was interesting because they brought me an image. I have a mulberry tree out front. I think it's an Afghani mulberry. And I love that tree. It was growing like straight up. And so they brought me a picture of if they were to trim it for production, then it kind of looks gnarly. It's not as pretty a tree. So did I want it trimmed for production, or do I want it to be just a pretty tree? It doesn't mean it wouldn't give me anything. It just wouldn't give me as much. And I said, well, this is a farm. We've got to have production, because whatever we don't use internally, and that means everybody at Zang International, what we don't use internally, we donate. So I want production, because quite honestly, if I could feed the world, I would. So what do I want to say to $120 stackers? If you're referring to the spot going to 120, it's chump change. It's cheap. It's still severely undervalued. Keep stacking in any way that you can. Keep stacking. And from Facebook, Jade Deja asks, if gold stacking is so high in price, is it wise for a person to solely focus on silver stacking? It is not wise for that. They perform two completely different functions. And it has nothing to do with price, because you can buy fractional, you can buy smaller than an ounce, and there's all different ways to do it. That's why you need to give us a call and let us set up your strategy, and then you're going to see and you'll know what to focus on instead of random, well, gold is expensive, I'll buy silver. There's a reason why silver is the secondary monetary metal and gold is the primary currency metal. And even, I didn't pull this up, I'm sorry, but I didn't really hear about all of this. I'll pull up something for the gold and silver ratio for next week for sure. In fact, that'll be like the first thing I do, so I don't have to worry about it. Okay, but that ratio, gold to silver, can grow more and more narrow until we really go into the hyperinflationary event. And then by a very, 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 very wide margin, gold outperforms silver. It isn't that you probably couldn't, execute much of the strategy totally on silver, but it would take so much. It would just be unwieldy, where I would have the ability to buy a piece of property just with this. right? Just one coin, not this particular coin, mind you, probably, but maybe so, because historically speaking, 25 ounces of gold would buy an entire city block, buildings and all. So, or the equivalent, and this goes into the equivalent category, which you can call us and we'll explain that further. But you got to have both. You really have to have both. And you have to have that community. And Miramore asks, hi, Lynette, what can we do when coin shops... okay, I thank you for asking this question, because this also came up yesterday in the meetings and I completely forgot about it. And so now you reminded me. So I'll read the question. What can we do when coin shops will not buy constitutional? Why won't they? Thanks. Well, what you can do is you can make sure that you have a relationship with a company like us, where our wholesalers, we're not having any problem whatsoever with liquidating. In other words, you sending it to us and we can liquidate it for you, whether it's constitutional or any form of gold or silver. The problem with the shops is that they don't have deep pockets. They're typically just a mom and pop, which is not to say that they're bad, but they just don't have the pockets that a corporation that's set up like ours has. Because what are we going to do? We're going to give you an indication bid. If you bought it from us, this happens very quickly because we're quite clear on what it is that you're holding the wholesalers clear on it. But let's say you didn't buy it from us. That was one of the first questions that I asked when we were setting up this company for all of the wholesalers that we're working with is, will you buy back if they didn't buy it through Zang International? So you create those relationships with those of us, and maybe even Zang International, that has deep pools of liquidity. That's why they won't buy it back, because they're overwhelmed. As the prices of the spot markets, because that's what people are looking at anyway, the prices of the spot market goes up, then the gold and the silver that's in jewelry form or constitutional form or any of that, that's when people want to liquidate it. All right, well, that's not a problem for us. I love constitutional silver. And if it pushes the premium down, that's good for you buying constitutional silver. But just make sure you have the right kind of relationship in place. That's what the mom and pops, it depends on what they get to bring in, whereas we're working with wholesalers. So if we know what your goals are, we match the tool to the job, the right tool to the job. You are not going to get that at a mom and pop shop because they're going to be more limited in what inventory they carry. And if there's a big push to liquidate when the spot prices go up, well, then it creates problems for them. So that's really what's happening in the mom and pop shop arena, and that's easy to resolve. Just create that relationship. And we can make that happen. And Green Smash asks, how much silver is left of all that was ever mined? Silver is consumed and not recoverable. Yep, that's a really, really good question. And I have looked for that many times in the past. I'll look again. Let me see. I'll see if I can find that out. Can you save that question for me, please? Gold is obviously a lot easier. Okay, let's see what we can find out. But I know in the past when I've tried to ferret that out, but maybe I'm getting better at some things, and maybe I will ask the question a little bit better. And Jeffrey Hadley from Facebook asked, does oil and gold prices move in a like manner? They can move in a like manner because a lot of the rise in oil prices would also indicate a rise in inflation, a rise in general prices for goods and services. then gold's most important function is to protect you from that. So that's where you see those kinds of similarities kind of playing out, but for very different reasons. Where the other area is like silver. Oh, I might need to sneeze. But like silver, oil gets used up, silver gets used up, and there is a finite amount of it. And of course, there has been not a total, but a general shift away from renewable resources that puts a lot more reliance on things like oil or coal or natural gas, all of which you're seeing. I don't know about coal, haven't looked at that, but you're seeing major spikes in natural gas as well as oil. So they can move in a like manner for different reasons. But I can also do a comparison, and let's take a look so that it's educated. Okay, comp. Okie dokie. And Piotro, oh God, I'm going to butcher this, please forgive me. Piotro Wojciechowski, 1150. What do you think about digital gold and silver? It's not gold or silver, period. So no, I don't like it. Now, having said that, as long as the gold and silver were redeemable, in other words, like interkinesis, and that it's digital, it's on a MasterCard, I can go shopping with it. But if I want to take physical possession of the underlying, I can do that too. So I see a place for something like that in the first part of the portfolio, because that is about liquidity, okay? However, this would not be where I would put the lion's share of my holdings, period, because if you don't hold it, you don't own it, and it has a different kind of function. So if it's just digital and I can't redeem it, I'm not touching it, period, end of discussion, because it ain't real. And Yukon Cornelius, wow, a lot of references today to one of my very favorite Christmas shows, which is the Island of Misfit Toys. It's what I execute for Christmaka here. It's kind of funny. So Yukon Cornelius, who loves gold and silver, I know, with the current conflict, I'm thinking that the price of gold and silver will start to climb soon. I agree. That's why I said in the earlier question, when do I think I'm going to see them hit new highs? Well, in fundamental value, every time they print, the value of that goes up. But yeah, I agree with you. You know, right now it's the market sell-off, but that's going to shift. So, yep, bond rates are up because of the inflation. That means that it's a limiting factor of the central bank's ability to lower interest rates to create even more inflation. And oil is up and gold and silver down. Well, oil is up because of all of the Hormuz Straits and what's happening with the conflict right at this moment, which is also pushing the stock markets and the bond markets down in a rather big way, as witnessed by interest rates up, market value of the bonds down. So what you're seeing in the spot silver and gold markets is the fact that whoever has to come up with more money will sell what they need to sell to come up with for those margin calls. We saw the same kind of behavior in 2008. You know, so this is normal behavior, and it's to balance out what's happening in the stock market, not the oil market. So I know that's why you asked me, or somebody asked me that earlier. And again, for different reasons, 100% you will see the spot markets climbing soon. Because, again, the more the inflation trade is coming into view, then the more traders will go toward the precious metal contracts. Don't go do contracts. Just do the physical. Do yourself a favor. And Ren Pixie asks, I own my land outright but need a well. Would it be best to get a fixed rate loan and then pay it off during the switchover? You do whatever you're comfortable with, but I'm saying yes. The only reason why I have a mortgage on this house right now is because I want to execute that strategy with you. Otherwise, I wouldn't do that. But I want to execute the strategy with you. So yes, fixed rate, that's the same exact strategy that the governments use. They have all of this fixed rate debt, and the goal is to repay it with currency that has less and less and ultimately no value at all. So, yep, exactly. That's what I would do. You do whatever you're comfortable with. Great question, though. And Lori Limbach, 9662. What if you only have silver and not gold when the reset happens? Is it handled the same? Well, if you only, like I was saying earlier, you can probably do all of the functions that we're doing in a diversified way in a non-diversified way with silver. The problem is the amount that you're going to need can become very, very unwieldy and not really, it's just much, much harder to do. But I will say that going into this hyperinflation with at least silver is a good thing. But there's all different ways that you can accumulate, right? I mean, these are gold, they're white gold, but they're forms of gold, not just coins. And I have stuff which, if you want, maybe I'll pull it out because I was just looking at it actually yesterday. I have a whole bunch of sterling silver or 925 silver old jewelry that's really kind of funky. Like, I don't wear it, I don't use it at all, but it's still silver. It's still 92.5% pure. So it's just unwieldy. That's the biggest challenge. And when you've got to execute a strategy, you really want it it's the right tool for the job. How much silver would you need to buy a city block? A whole lot. That's what I can say. So it's better than nothing. And certainly you guys know the dime cards. If you're a client, you get the first one for free and the rest of them at our cost because you're the army out there distributing and trying to help people through sound money. And I am going to be working on, I didn't have time to do it this weekend, but I will make it happen this coming weekend. I am going to do another video with the goal of having it be under 2 minutes. That might actually be more powerful for those that are utilizing the dime card to help people understand what's happening. So I will have that for you next week. And it'll be on both gold and silver. Well, it'll be on silver, actually. That's just another little reminder for me. Oh my goodness. You want to see all the notes I have just from today? And aside from what Tom is copying for me and what I already have on my plate. But that's okay because I work for you. So you're the boss. I will do whatever it is that I need to do for your benefit because that's my job. And Shattered Not Broken asks, how would folks pay taxes in a digital CBDC? That's the beauty part of physical gold and silver, because you can always, thousands of years, my friend, convert gold and silver into whatever the fiat money system is in the realm. We want to get gold and silver back in the system because then we can use it more directly and they can't inflate our wealth away. But what you would do to pay your taxes or to buy a commercial building from a corporate entity, right? Because some of this, as we're talking about the exit strategy, like if you were buying a building from me, I would rather have this. You can keep the fiat. I don't want it. I'd rather have this. But there are going to be many cases where that's not an option, and maybe by the time we get there, that won't be an option. I don't know this yet, but we'll find out. In that case, what you would do is, this is part of the exit strategy, you would send it into us for liquidation. That's what you would do. And we would convert it into whatever the legal money is of the realm and wire that to you, and you would pay those property taxes or any other taxes. That's how you do it. And Cy Fields asks, when copper trades over $6, silver crashes. Coincidence? Remember, silver is the fuse. Copper is a more industrial metal. So when you're seeing copper trading, it's what's going to happen in the global economy. Copper is not a monetary metal. It's an industrial metal. I can take a look. I'll run a perf chart. I'll run a perf. I'll run a perf chart. Let's take a look at that. That'd be easy enough to do. And Konzi 2011 asked, dollar dead? The dogs bark and the circus caravan moves on. The same thing happened with the pound after the U.S. took over hegemony. The pound still works. Any of this crap still works as long as the public has confidence in it. But what about the 400 currencies that don't work? And oh, by the way, the British pound, when we took over as the world reserve currency, it's a different pound, isn't it? Right? All of the systems changed. So it only works as long as there's confidence in it. But can you explain here it is. This $10 trillion Zimbabwe note doesn't work anymore, does it? Because people lost confidence. This 25,000 Iraqi dinar doesn't work anymore. Nobody has confidence in it. Although there are people that think they're going to revalue it and it'll have confidence in the future. It won't. That would be a historic anomaly. I can't buy anything with these million bolivars. Heck, I can't buy anything with this $20 gold coin, this gold certificate. I mean, think about this, right? It only works as long as there's confidence in it, because it costs nothing to create. You just agree to work for it. That requires confidence. You agree to try and save it. This is 100,000 rupiahs from Indonesia. No value. This is 250 Iraqi dinars. No value. $50. What do you buy with that? Not much. $100. Right? Oh, this is a counterfeit. I mean, seriously, I can go on and on and on. 4,800 times of them. Oh, this Confederate dollar. What can I buy with that? Nothing. This state of Florida $5 bill. What can nothing. Do you see my point? You can look in a very narrow lens and you can justify whatever you want, and you don't have to do the work to really understand what's happening. That's your choice. But ignorance doesn't make you immune. It just leaves you vulnerable. Dollars will work in the system. You think central banks want to give up their monopoly on making money? That's how they make their money, right? Our government orders a whole bunch of debt, then the Federal Reserve creates a whole bunch of, bills and digital money. It costs them virtually nothing to create it. Why does it have value? Because you believe it has value. What happens when you don't believe it has value? Well, that's what rapid inflation does. rapid inflation begins to show the lie, and it begins to get people questioning the value of this crap that's out there. And then confidence erodes because they don't see their lives getting better. We're talking about a strong dollar today. Oh my gosh. I pulled a whole bunch of headlines so I could do something on that. Strong dollar. Has anything you bought gotten cheaper? Don't believe the lies. So the pound still works, not as well as it once did. The dollar still works. Yeah, 3 cents out of the original dollar's worth of purchasing power. And if you looked at the pound against the dollar, because not every government, actually most of them do not publish the purchasing power, so we kind of have to use the dollar for that. But when you go go to xe.com, that happens to be the one that I use, and pull up any currency you want. Anyone you want. I don't care whichever one you want. Pull up anyone and compare its value against the US dollar, against the spot silver market, and against the spot gold market. That's more revealing of any truth than just your assumption that it still works. Well, I don't know, $800 was the average wage in 1913, and a family of 4 could survive on that. I'm not saying they were rolling in it, but they needed one wage earner and they could eat. They could take care of a family of 4. What does $800 do for you today? That's not even a month. And you're living under a bridge when you're making, $100,000 a year, 2 wage earners each making that, and you're paycheck to paycheck? Is that because the value of everything else went up so much, or the value of the currency went down? So I like that question, because what that question tells me is that I'm not successful in explaining this well. And I know before you go to my defense and all of that, you got to understand that that is my job. And I would rather know when I am not performing my job at the level that I want to, because I am constantly trying to figure out how to explain this stuff better. Because how many times can you be lied to when you do not know the truth? So Rob on the Road asks, when you get a mortgage, what are you borrowing? Nothing. Debt. You created the promissory note, the currency. Yup. You created inflation. The bank was just the facilitator. Yup. So how can they charge you interest? Because look, this is a big game. And, those have been chosen to win or lose. Make sure you watch the video from Dr. Ott, because we kind of talked about that as well. Yeah, how can they charge you interest? Because they legalized it. Because we, the people, allowed the corporations, the for-profit corporations, to take over our system. Let's take it back. Can you put up on the screen how they can get a hold of us, please? Okay, and Cool Brother G 5401 asks, will the price of gold stay up after the revaluation, or will it go back down? Okay, so when they do a revaluation, everything revalues. But typically gold and silver remain at those elevated levels where, like, the stock markets and all of that, that's like boom, immediate, that's overnight. But the gold and the silver markets, on average, so I can't tell you for sure that this is how long it's going to be, because that's above my pay grade. But what I can tell you is that on average, we would have about a 9-month window to execute, because I do want to do it on the first one, even though it won't be at fundamental value yet. But what happens to mortgages in these trends and in hyperinflation, in an attempt to protect the banks, because after all, they're way more important than the public, our mortgage contracts will end up getting modified. Very similar to what we saw in 2008. So what you want to have the ability to do is to pay that mortgage off in a heartbeat so that you do not have to reset your mortgage with even worse terms in there. That, look, they bring you a mortgage, the book is this thick. And what do they say? Sign here, 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 sign here. Because you're due to close. You don't get it a month in advance where you can maybe have an attorney look at it. And if you did, then you probably wouldn't want to take out the mortgage. You just want that house. So they've suckered you in. So, I can tell you that part of the exit strategy is to repay this fixed rate debt, just like the government strategy is, within the U.S. dollars that have no value at all, because what you do not want to do is restructure that mortgage. You're basically giving yourself away, So, yeah, we have about a 9-month window typically. It could be less than that. It could be longer than that. Then it will reset. But again, as soon as it resets, and I've done a video on this, as soon as it resets, then it starts to climb again, and it starts to climb faster than stock markets or anything else that are based on this crap. Because they don't change behavior. They just lop off zeros. So, Sandra Lee Washburn 8494 asks, where can we buy copper right now? Well, you could probably, I don't really work with copper because it is not a monetary metal, but I can see if our wholesalers deal with that. What I could also tell you, Sandra, is go to the bank, get rolls of pennies. Sit there at night, go through those rolls of pennies looking for 1982 or earlier. And I'm just going to make a note here. Do our wholesalers work in copper? I don't know the answer to that, honestly, because I've never even really been interested in it. I used to accumulate the scrap copper from my dad's job site. So that was kind of my intro to it. But go get some rolls of pennies from the bank. Find the pennies that are minted 82 or earlier. They're 95% copper. They'll cost you a penny a coin. Then you'll bring those rolls back to the bank and get other rolls. So you'll just put in the new crap in exchange for the good copper coins. I've known people that have done that with silver as well. Dimes, quarters, half dollars. It's just not as easy to do because silver's been out of the monetary system since 1965. So, Rob on the road. I'm falling in love with you. How do you back a promise to pay with a promise to pay? Ta-da! You don't. You work for more promises to pay at the end of the day. They're stealing your energy. He's right. He's right. What do we have of value but our time and our labor? And when they were setting up this system, seriously, you go back in and you read all of the discussions around setting up of a new system, and it's mind-blowing. They said a few things that were really kind of amazing. But one of the things that they said was, if people have to work harder to sustain their current standard of living, they will have less time to pay attention to what we're doing. To me, that's evil. Why not have that transparency so that you have the ability to make, educated choices that puts your best interest first? That's what my work is all about. Follow those links. Do your own due diligence. If you come up with a different opinion than I have, I will support that. I will fight for that. But random opinions are just not that relevant because all those random opinions are based on hopium. And hopium is just not that great a plan. It's just not. I'm sorry. Because when have you seen those that are in power? So here you go, not they, governments and central banks. When have you seen, and corporations, when have you really seen them putting your best interest first? They don't. They don't. So who does? You do. You are the one that will be the most impacted by any of the choices that you make. So, in my opinion, they need to be well educated. I've spent the time in these markets. I've been groomed for this moment in time. So I've really been studying this stuff on all different levels since I was, my earliest memory is 4. And I'm happy to share because I don't ever sit here and say, take my word for it, do I? Have you ever heard me say, just take my word for it? No, I'm saying, here are the links. Do your own due diligence. Hold my toes to the fire, but hold everybody's toes to the fire. Everybody's, including the governments, including the central banks. Nobody does. And they actually even said when they're setting things up, if we make this really complicated, nobody questions us. Because what do people do? What have you done, right? Have you ever heard yourself say, oh, I don't understand this money thing? Probably so. And yet it's so simple. But they don't want you, they meaning the government and the central banks, do not want you to understand that this stuff is corporate debt and it's based, to your point, a promise to pay with a promise to pay and a promise to pay. It doesn't mean anything. It is just a way to sucker you into the system and keep it going. Because when you see the numbers go up, you think that's a good thing. But what it really is the value of what you're holding going down. And speculation, that's part of it. So many signs, so many typical things that happen during a financial crisis I'm seeing right now. And Bretley 2789, have you ever interviewed or considered interviewing Catherine Austin Fitts? And I will tell you that I have a lot of respect for Catherine Austin Fitts and would not mind having a conversation with her. Where you see my hesitancy, because we do agree on so many things, but there are areas that we do not agree on. Now, mind you, I would absolutely have that debate with her. So if you know her and she's willing to have that debate with me, I would absolutely have that conversation with her because I do have a lot of respect for her. Absolutely. And Dale Jones 107 says, how do you keep Medicare from counting your precious metals as income so they can siphon more money from you? I don't know where you are, but there are obviously some things that I can easily say on camera and some things that I cannot easily say on camera, nor should I say on camera. And that this would be one of them, Dale. But if you are ever, and that actually kind of brings up something else, because I did hear that people are very upset that the first time that I'm going to do an event, I'm doing it in New Zealand. And I have to tell you that the only reason why I'm doing it there first is because we've been waiting. We signed our lease in May of 2024, and we are still not in our permanent space. We're on the floor, but we're in our temporary offices. So we would have had events there a long time ago, but we're not in the office. Maybe they got the punch list for the first part of the reno done this week. I don't know. because every single time we've gotten, oh, we'll be in by September 1st, or we'll be in by then, or it has proven not to be true. So we are this close. And as soon as that's done, because look, we first signed the lease, we almost said, okay, in a year, we're going to do an open house, because that was May. We thought we'd be in September. And frankly, here we are. It'll be 2 years in May. And we're already in March, and we're not in yet. So please, please, please understand. I do go around the country. I'll be at Rick Rule's event in July. I will be doing another event in North Carolina in May. And I'm not really sure where else we have it inside of the country, because I don't do those schedules. But I do travel around the country live, because that's my preference. I mean, I want to sit down and talk to every single one of you. So please don't be upset with me. It's just that I'm going to New Zealand, because New Zealand holds a special place in my heart, since it was the non-dollar denominated bonds of New Zealand that I first discovered back in 1987 that kicked off my understanding first of currencies and how they work, and then currency life cycles. So there's a kind of a special catch in my heart, and I was going to be there anyway. And I know that I have a lot of fans in New Zealand, so that's kind of how that happened. And I hope you guys can forgive me, because I really am chomping at the bit to do live events here. And so as soon as we are officially, even before we're finished with the second and third part of the build out, we will plan an event here in Phoenix. And I do like to keep them small and intimate. The smaller and the more intimate that I can make them, because those other events are larger events, so I don't have as much time with each individual. But the events that we'll be doing, we'll probably do some larger ones too, but I like to keep those very small and intimate, so that I really have the opportunity to sit down and talk to you. So I hope you can forgive me. Please, please, please. I'm just going to be there already. And it has a special place in my heart because of the non-dollar denominated bonds. So it's kind of special to me. But it doesn't mean that you're not special to me if you're not able to go, or you're not going to be in New Zealand at that time. So please forgive me. Anyway, but I would, Dale, if you could come to a live event, or even if you can have a conversation with one of our strategy specialists, there are certain things that you can do legally. Everything has to be legal. There are certain things that you can do legally, and certain things that you can't. But have that conversation. I can't really do that on air. I'm sorry. And from Facebook, Jade Deja asks, if gold stacking is so high in price, is it wise for okay, we've already answered that question. And Rob on the Road says, you can't charge interest on Fungizil. Fungil? Fungizy. Oh, Fugazi. Thank you, Fugazi. I'm sorry. There's nothing there. Yeah. Well, if you write the rules, you can charge interest in anything. I mean, look at the world that we're going to. It's all subscriptions, right? No matter what you're doing, they want to get you on the hook to buy the product and then have monthly subs. Yeah. You think they're not setting us up for monthly subs, getting us used to all of the stuff on cars? The one thing I don't want to do is the sensors in the tires, because those are just a pain in my butt. They're always constantly going off. It's annoying. But yeah, you can't charge interest on Fugazi, but corporations find out ways to do that, don't they? Nothing there. And Sam Birdwater asks, how do you run out of fiat money? It's about the confidence and the acceptance. That's how you run out of it. Once people realize that it's nothing, that I can have $10 trillion and I can't buy anything with it, then the confidence is absolutely gone and the fiat money is worthless. And one of the things that we've noticed since 2008, any of these big monetary pushes where they're printing a whole bunch more money, it has less and less and less and less and less impact. So that's another way that you can run out of fiat money, is that the more of it you print, the less impact that all of that printing has on what you were attempting to accomplish. And what it really does accomplish is higher and faster inflation, which then erodes that confidence level even more, and it sends us into one of the doom loops. And remember, I've gotten 3 done so far. You'll probably see them when I'm traveling. So I still have 2 more doom loops to go to, but that's one of the ways that you would do it, is that loss of confidence, of which we are very, very close. We're not quite there yet, but this is something that I do pay attention to a lot, because that's the only thing that's what enables all of this stuff, is that confidence level. That's what enables all of the AI stuff and the taking over and the, okay, well, we don't need sound money that we can take out of the system, because surely those central bankers and that government, they sure do have my best interest at heart. Not. They don't have your best interest at heart. That's why we, the public, must come together and have our best interest at heart. How do you run out of fiat money? When confidence is gone. That's how you do that. Otherwise, they can just keep doing it. That's why they've gotten away with it for 100 years. And Jade Dejat from Facebook asks, sorry, so many questions. Do not apologize, because if you have these questions, lots of other people that are watching also have these questions. So you keep asking them. What does slabbed gold or silver mean? And is purchasing 1 ounce bars equal to 1 ounce American Eagle? I'm going to answer the last question first. And the answer is yes. Silver is silver. Now, you'll pay a bit of a premium for the American Eagle because it's more recognizable, but you can have silver in any form and also in any condition. This is true for gold too, because gold and silver in any form is monetary at its base. So I own all of the above. I also own some small, I don't like large silver bars, other than the one that I borrowed from my friend, because that makes a nice sound when I drop it on the table. But personally, it's not very usable, right? And I'm actually executing a strategy. I'm not just stacking gold and silver. I actually want to use it, which takes me to the first part of your question. When I hold this up and you see it's in a hard tamper-proof case, that's called slabbing. So if anybody even made a teeny-weeny attempt to open up this case, then that would null and void the fact that it is what we say that it is, and it would have to be recertified and re-slabbed. So slabbing takes it to a new level. Having said that, you have to be really careful about what some maybe not as ethical as they could be dealers do by slabbing brand new stuff. Why? Why does that matter? Because this stuff was never created to be used in circulation, whereas this stuff was. So to have this perfect, of course, was never used in circulation. And the slabbing, by now it's protected, like I can't touch this. I can hold the slab in my hand, but I can't touch this coin. So it fixes its quality level, which is not the gold content level, the number of blemishes that there are at this level, versus this is pre-1933, this is also pre-1933. But you can see this is just raw. I hold it in my hand. It has lots of blemishes on it. It doesn't matter. This is just about an ounce of gold. This gives me an additional layer because there's a finite amount of all gold, but there's an even more finite amount of this in this quality level. So let me talk about quality because I'm thinking that's probably your next question. And when you're looking at the headers, what it'll tell you is it'll tell you the date of the coin and where it was minted. And then it'll say something like MS63. Okay. Well, as soon as you see MS, what that's telling you is mint state, which means that this particular coin has never been in circulation, unlike this coin that certainly it has been and still is, I hold it in my hand and stuff, in circulation. They perform two different functions. That's why I have different kinds, right? So MS never been in circulation. But back in the day when it was being used for money, they weren't thinking about this collectible market. So they would have stacked them. They might have thrown them in a pouch. They might have, just kind of thrown them in a vault. So therefore, these coins will have blemishes. So that 63, that number afterwards, tells you the level of blemish on the coin. And that goes from MS60, having the most level of blemishes. I don't really do this. I might own some mid-state 60s. That's kind of the equivalent of this. If I'm going to do a 60, I'm probably just going to do a raw. 2, a mid-state 70, which means no blemishes. Absolutely perfect. I've personally never seen a pre-33 mint state 70 coin. I think the highest quality level that I personally own is a 67, but most of my holdings are probably in the 62, 63, and 64 arena, and some 65s. So the lower the number, the more the blemishes, and the different the function. Okay, the different the function. Those 67s, very low in population. Maybe there's, 5 of them. Maybe there's 100 of them, but there's not more than that. Okay, that's my legacy gold. That's the kind of thing that I will pass down from my generation to my daughter's generation, and hopefully they will pass it down to their children's generation, and their children will pass it down. Kind of like the Queen of England, the King of England, right? You think about what makes them so powerful and have so much money. Well, it's called dynastic wealth. That's wealth that's lasted in families at least 300 years, and it has 3 legs. Real estate, truly rare collectibles, and just regular gold. And you can do all 3 of those with gold, because you can have a gold mine and you can have a gold rare collectible in any form, as well as just the raw coins. And this is actually what can enable you to maintain, right? We talked about property taxes, to maintain the wealth that you've managed to accumulate, properly diversifying your portfolio, but also it enables you to accumulate more, which is what the strategy is. When it flip-flops from undervaluation to fair valuation, inevitably happens as well. So that's a lot of information on slabbing and the different quality levels and all of this. But perhaps from that explanation, you can see more clearly how the sound money strategy is built in layers. And it puts your goals first. That's the first thing we're going to talk about. What are you trying to accomplish? Because again, there's gold and then there's gold, and there's silver and then there's silver. So it's always the right tool for the job. And Whistling Freedom, remember Canadian banks closed for those supporting truckers? And so did the insurance contracts, and so did anybody that were actually even, you said it was not just the truckers. If you gave the trucker $5 so that he could have lunch, your accounts were closed too. And that's Canada, who we kind of think of here in the U.S. as the most similar to the U.S. Yeah, desperate governments do desperate things. That's why you have to become your own central banker, and why it's so critically important to build community, and why it's even more important to get sound money, redeemable gold back in the system again. That's it. Thank you for bringing that up. Absolutely. And from Facebook, we have Thomas Smith. Should we store our silver, gold, Bitcoin, XRP in a trust? If so, which trust structure? That, Thomas, is a very good question. One that is better answered kind of by an attorney. But things are shifting, okay? So to answer it, yes, I think a trust is a very good thing. I am not an attorney, so you need to talk to somebody that is qualified to speak at that level. And honestly, I have some very mixed feelings. Yes, I have a lot of stuff that I do hold in a trust. There are other things that it's debatable on whether or not you want to put on a trust. And part of it kind of also depends on reportability. So I'm going to put this one in the same category as the other that we talked about a little bit earlier, where I really can't go into detail online in this kind of venue on it, but I travel all around. Come see me in person and ask me that question. We can have a different conversation. And at Metal Market Minute, did you already talk about why the Dow dropped 1,300 points and gold is dropping too fast? I did, but I'll talk about it again because I think redundancy is important, since it takes the normal person at least 7 times hearing, smelling, tasting the same thing before it even begins to make sense. That's why I have so much patience for the questions. Also, maybe if I answered it one way, I need to answer it a different way. So if I ever answer a question and you didn't understand it, that's on me. That's not on you, because that's my job. So, yeah, gold is dropping 1,300 points because of all the geopolitical uncertainty that's happening, on top of the channels in which this geopolitical, these issues are unfolding, on top of the bursting of the AI infrastructure bubble. I mean, there are a lot of reasons why the markets are dropping. Why is gold dropping? Well, there you go. See, now I haven't had one other person on here when they asked me about gold, asked me about spot gold contract. If I ever could get that, and don't feel bad about it, because this has been my eternal thing. Gold and the spot gold contract are two different things, but you're referring to the spot gold contract. So with the Dow dropping 1,300 points, since most of those purchases have been done on margin, in other words, with borrowed money, then whoever borrowed that money has to come up with more money for what's called margin calls, because the value of their stocks dropped below that level and Wall Street wants more money. So they can sell what they have to sell, whatever the market will bear. And typically that is a spot gold or even a spot silver contract. And I could probably, with a little bit of work, and we're kind of running out of time, but we saw the same kind of behavior in 2008. This is the same kind of behavior we see all the time, because it's one contract against another contract. But don't believe Wall Street's lie, because when they put a number up on the board, that is the value of the trading contract, not the value of 1 ounce of gold. And the more money they create, the higher that number in terms of, in this country, dollars are of gold, but the way that you can check it out is go to a currency converter website. I happen to use xe.com. There's a whole bunch of them out there, but that happens to be the one that I use. And pick any currency you want, anyone at all, put it in versus the US dollar against the spot gold market and the spot silver market. But they don't refer to it as spot contract because they want you to think of that contract as gold, just like they do with the cryptocurrencies being gold and making them look like an ounce of gold. That's the way they want you to think about it, like it's real. Bitcoin is not real. This is real. And the spot markets are not real. At the moment, yep, they are going to be reflective, though I'll have to find out what happened to premiums today. But they can reflect just your basic gold. They don't have, okay, going back to the slabbed question, the movement in those spot contract markets, the more rare and the higher in the hierarchy that these coins go, the less relationship they have to what happens with the spot market. Something like this, just a raw ounce of gold, at this point, this is changing. This is a very big deal that it's changing. But at this point, this is more than likely reflected in the spot markets. I have to find out about premiums. But once you get into the slabbed coins, then things start to diverge, and they're not as impacted by the spot markets because there are other layers of protection on top of them. So I've done some work on this. I'm still working on the NUMI one. I got a little distracted. I was going to try and finish that this weekend. That didn't happen because Iran happened. So that kind of distracted me, but that's really what's happening is those people, those entities that borrowed to buy the stocks and the stocks are imploding, they're getting calls to bring up more money, so they have to sell these spot gold contracts to come up with that money. That's what's happening. It happens all the time. Every time something like this happens, it's the same pattern. But again, to earlier, with the geopolitical uncertainty, there isn't even one teeny doubt in my mind, but that spot gold and spot silver will be substantially higher, probably within the next week or so. So if you were waiting, call today. If you were waiting, stop waiting. Get it done. Give us a call. Make sure that you have your sound money strategy in place and executed. And David Rios T70, I want to see her use the fiat money again. Okay, but I don't know that I have that much in there, but there you go. And I think we have time for one more question. Okay, so this would be JAP 3270. How could they take metals in other countries? Well, I'm not really sure exactly what you're talking about, but since I do so much global travel, I can tell you that, obviously I test traveling with gold and silver. I do, and it might be stupid of me to talk about. It's not like I take anything that has super big value, but, I usually will take one inexpensive or relatively inexpensive slabbed coin with me and maybe another raw one. I bring the dime cards, as well as some silver, and I have no trouble whatsoever traveling in countries. Nobody even asks me about it. Nothing. So it's actually pretty easy. And once you get there, gold is universal money. These 32 areas where they use physical gold, this is global. Tell me what other global money there is, really. Now, go ahead and say Bitcoin. Bitcoin is going through the test right now. So we'll see what happens with that, but I think you can really see it's intangible, it's over here, and it's not a flight to safety asset. It is a risk-on asset. It goes up when money is cheap and free and easy because they do it on margin. They do it with debt. They push these prices up. So, yeah, you can take gold all around the world and you can liquidate it into any currency that you want. Easy, easy peasy, because gold is universal money. So is silver. You can do the same thing with silver. So, can you just go up a little bit so I can see that whole question? Let's see. Why is dollar goes up a couple points? Everything and everybody loses. Markets, metals, fake coins, etc. Riddle me at that. Well, how about, Alfred, because I did pull a whole bunch of stuff because I'm seeing all of this talk about what a strong dollar is and blah, blah, blah. How about I just do a PowerPoint on that? So I had that set up anyway. I cannot guarantee that I will get it done this weekend because I really want to get that NUMI piece done. And I also, 100%, no choice about it, have to get the fourth part of the Doom Loop series done. But grab that question for me, please. And I will answer that because I know the answer to that. And I want you to know the answer to that. And question me, because that's how we learn things and bring in different opinions, because that's how we all learn things and how we build a community. A community is not a place where everybody thinks exactly alike. That, my friends, is a cult. What I'm trying to build here is a community where all voices get heard and respected. So the only questions that I won't answer are ones that are bigoted, because we're all in the same boat together. And I know 100% that together, 3% of the global population, just 3%, can get sound money back in the system again. We got a shot. Let's take that shot while it's available. Let's grow this sound money movement. Citizens for sound money. Let's grow this movement globally, and let's make a positive difference for everybody. We can do it. And until next we meet, please be safe out there. Bye-bye.